I'm 680 News Senior Business Editor Mike Epple. We saw a beat down on shares of BlackBerry today that we haven't seen in about 4 years' time. Shares dropped close to 20% at the lows as BlackBerry reported its second quarter earnings, and it was a big fail on a number of levels. First off, they lost $44 million U.S. Now, part of that was due to the fact that they had a big purchase during the past year, which was attributable to a loss on the quarter. But at the same time, the sales growth for BlackBerry did not live up to expectations. It was up 16% compared to last year at $244 million, but that was below guidance. And their earnings forecast wasn't up to investor expectations either. So BlackBerry today dropped to close to a one-year low. It's back below $9 a share on the TSX. And again, at its worst level today, it was down close to 20%. Meantime, Netflix, faced with oncoming competition from the likes of Apple Plus and Disney Plus streaming services. Well, today we saw Netflix drop to negative for the year after being up by as much as 46% at its peak back in May. There's some analysts questioning whether or not Netflix is going to be able to maintain the momentum with oncoming competition. Keep in mind, next year, HBO and NBC are also planning video streaming services. And of course, Amazon is also in the market. So lots of competition, and Netflix is one of the higher priced monthly subscription fees as well. Facebook thinks that in the future we'll be able to control a computer directly with brainwaves. They're buying a company for about $500 million, a startup in New York called Control Labs, and basically this taps the power of the human brain into a wrist device that can basically control a computer. Now, it's just in the developmental phase at this point. Nevertheless, Facebook on the cutting edge for future computer integration with the human mind. A rough go for some stocks that have been, in the spotlight for much of this year. Some were new and others were just simply high flyers because of the new sectors. We saw today shares of Uber, Tilray, Canopy Growth, others all drop by anywhere from 3 to 5%. And many of these are well below their peaks of the year. Beyond Meat also in that category. There's a lot of these companies that were built on momentum still have yet to make any money. Investors taking a little bit of profits on some of these companies. From the 680 Newsroom, I'm Mike Epple for City News.